Hello and welcome, everybody. I'm Steven and I'm a popular investor on eToro. And my eToro username is 𝗕𝗂𝗃𝗲𝗃. So today I wanted to do kind of a presentation for you today, which is going to be very similar to kind of like a webinar, which I'm going to run through lots of different slides in which I'm going to talk about how we performed in 2021, which I call the year of portfolio growth. And then I'm going to be talking a little bit more about our outlook for 2022 and some of the things that we might expect. So I'm going to be talking over a number of different areas today. I really want to thank all of my copiers for tuning into this video today. And I want to wish you all a happy new year. And I really hope together we have a really great 2022. So what I'm going to be going over today in the presentation is I'm going to be talking about me and how you can get in touch with me. Then I'm going to do a review of 2021 performance. Then I'm going to talk about some of the 2021 main risks that happened in the market. Then I'm going to discuss the highlights and the lowlights of 2021. I'm going to do a little bit of a crypto review and dive into that. And then I'm going to look at the growth drivers for 2022 and what can be some of those kind of key tailwinds for our portfolio. Then I'm going to talk about some important information for copiers. And lastly, our aspirations for the year. So a bit about myself. So who am I? So I like to call myself the approachable investor because I like to think that people can approach me at any time and that they're able to ask me questions. I know that everybody's at different levels of their investing experience. So I think it's very important in this day and age to kind of differentiate yourself from the hedge funds, which are very kind of cold, and to have an approachable investor that you can ask any questions to at any time. So I'm always there for you. So a bit about myself. I'm a full-time investor and I have been since early 2020. I'm fully dedicated to the market. So I'm looking at companies day in, day out, and fully focused on our portfolio. But I have over 13 years investing experience in both obviously stocks as well as commodities, Forex, and I've been investing in crypto since about 2016. And I have been very successful both in my personal crypto trading and also on eToro in terms of my crypto trades as well. So I do a lot of crypto trading as well in my other time as well for my own portfolio. So I have a lot of experience there. I also recently passed the 𝗕𝘂𝗱𝗴𝗲 level 3 exam, which allows me to continue to be an elite popular investor. I found that a very good experience, and although I had a lot of knowledge before through practical experience, it was very good to get some kind of theoretical extra knowledge around the subject as well. So that was a very worthwhile experience. About my previous career is I had a 14-year management experience working all over the world in countries. I'm originally from the UK, but I've worked in China, Qatar, the United Arab Emirates, Saudi Arabia, Bahrain, Singapore, Malaysia, in which I worked in many different management roles, predominantly in oil and gas and also in medical and security industries as well, kind of in senior country management roles, which allowed me to get a lot of experience of working with different customers, a lot of which are in the stock market. So I have a very broad knowledge of not only people, but also the companies that we are investing in as well. I also have, from an educational standpoint, I also have a master's in marketing Marketing is very important, especially in investing, because especially in this day and age, in the technology age, where companies have to try to market and brand themselves as well as they possibly can. I understand how this goes on, and I think I have a good gauge of what marketing and brand awareness it takes for a company to be successful as well. So I do take this into account when investing. I also have significant skin in the game, so I'm very well invested in our portfolio yourself. So you can be rest assured that every decision I make, I'm not only just doing it for you and for your portfolio, but you know, I am incentivized to perform as well as I can for my own portfolio. So I have enough funds in there to even satisfy the next level of elite pro. So I have significant funds on my eToro account. I'm generally a multi-asset strategy investor, and I trade macro ideas. So I look at what's happening in the market, some of the key trends. I look at a lot of data as well and decide which sectors I invest in or which asset classes. I also do a mixture of long-term and short-term trades. I look at the kind of macro picture, and I do a lot of fundamental analysis on some of my long-term and core holdings. But I also do a lot of short-term trades as well, which gives us extra profitability and also helps us to protect from volatility. I'm also willing to hedge the portfolio whenever it comes to it. I usually keep hedges in place, such as gold, silver, and gold miners, the majority of the time. But if a situation arises where there's a lot of unrest in the market, for example, then I'm willing to short indices or short weak companies that may be seeing a lot of pressure on them and they may not have good future growth prospects. So I make sure that I hedge the portfolio when it's required. And no, first and foremost, I'm really looking to provide as good growth as I can for my copiers. It's never guaranteed. As you know, the markets have a way in themselves. But I also look to try to protect your investments as much as I can. I realize that most of you have, you know, full-time jobs and you work really hard in order to be able to save money to invest, and you have families and you have a future that you want to provide for. So I'm very cognizant of that, and I make sure that I protect your capital as well as I can. A little bit more about my investment style. So as I mentioned, I look at macroeconomic ideas and themes. I look at kind of growth sectors and what I think is going to be good for the forthcoming year. I look at what's happening in the political framework. Is there any tension, for example? I also look at what's happening in the news as well, because as we know, that can affect stock prices and asset prices as well as looking at kind of key economic data, GDP rates, inflation, and many different other areas. I also do a lot of fundamental analysis, and I think it's extremely important. So that's one of the reasons why I'm a full-time investor, because I want to make sure I know as much as I possibly can about a company that I'm invested in or an asset class. So I do a lot of due diligence. I read a lot of annual reports. I'm also looking at companies' websites. I'm reading different analysis by different analysts around the world to make sure I'm up to date with what's happening. And I look obviously at the company's financial figures and see how they're performing, how they're growing, what their balance sheet looks like, the PE ratio, and all of those cool things. I also try to find as many undervalued companies as I can, where I think that the company is undervalued and the markets aren't fully appreciating that stock, for example. And I do that by again, looking at different areas, looking at their financial figures and looking at their valuations as well. And I also look for companies that have high growth prospects as well in certain areas, especially in tech. I also conduct a lot of short-term trades, and I do that using fundamental analysis. And I also look at technical analysis as well. I look at the macro picture. And for crypto in specifically, I also look at on-chain metrics, because that is very important in crypto. So I look at things such as the number of wallets, the amount of leverage that's in the system, the hash rate, the inflows and outflows to exchanges, and all of this can have an impact on the short and medium term of crypto prices. I also have about $5 million of assets under management, and I really appreciate all my copiers who have the trust in me and invest in my portfolio. And I am really appreciative of that. And I really enjoy getting to know you all. I have about 1,990 copiers from throughout the world. As I am eToro's most approachable investor, there are lots of ways in which you can contact me. So obviously on eToro, I am regularly posting on eToro, and you're able to send me messages on the eToro platform. You can respond to some of my posts. I always answer back to questions. Also, you can check out my website, which I set up last year, which is www.stevenbudgen.com. I keep that regularly up to date. You can also find frequently asked questions on there if you have any normal copy trading questions you want to ask me. I also have a YouTube channel, which is also called The Approachable Investor. And on that YouTube channel, I talk about, every week, I do a weekly review of what's happening in our portfolio. I think that's very unique. You wouldn't get that from the traditional fund management world, where you can have your popular investor each week talking about what's happened in your portfolio, the performance, etc. So you'll be able to check that out. I also do educational videos as well on that channel. And every quarter I do quarterly popular investor forum meetings with some talented and eToro popular investors with lots of different expertise. So you can check those out. I have about 700 subscribers to that channel. So please subscribe if you haven't already. I also have a Discord channel. On eToro, I'm able to answer lots of different questions. But in order to be able to have a personal touch, I thought it was very important to have a Discord channel, because people are able to answer me questions. I am very regularly on there and I reply to all of those questions. And the most important thing is it helps me to build this community. And you're able to interact with many different people on lots of different investing subjects, and also able to have a lot of fun. And there are many people at similar levels of their investment experience, and it's really great to have that bees community where you can all talk with each other. I also have a Twitter account as well at Proof of Steve, where I regularly post tweets and retweet a lot of important investment information, especially in crypto, specifically in Bitcoin. So I have three main goals for my copy community. Obviously, number one goes without saying. I really want to provide you strong returns. And I think I've achieved that over the last 2 years as a popular investor. And I have produced triple-digit returns for my copiers. But it's very important to understand that the markets don't always go up, and we have really good periods. And when we have periods in the market, in both the stock market and crypto, in which there can be some downtime. So it's very important to stay patient and to have a long-term investing mindset. I also look to provide strong communication and analysis. I think I've done approximately 25 to 30 different analysis reports on different companies and also different stocks in our portfolio and different asset classes. And this allows you to be able to kind of have a deep dive into my brain and see why I'm investing in these companies, and to really build conviction around my investing style and my investment thinking. Again, I do weekly investor videos, which are very unique. Thirdly, I try to provide investor education wherever I can, whether that's just answering your questions on Discord and providing constant education about what's happening in the market. My posts as well, which I talk about a lot of in educational areas as well. And lastly, last year, I also did a lot of investor education videos where I talked about key kind of beginner concepts in investing. So a bit about the performance of last year. So I'm not doing this presentation to brag about my performance over the last couple of years. I am very happy with my returns over the last 2 years. And in 2021, my portfolio grew about 117%. And this is really good because this is on the back of growth of 205% in 2020. But I just want to make a note here, because I know I'm very cognizant of the fact that the first half of 2021 was better than the second half of 2021. And that is because there was a lot of volatility in the stock market and crypto. And there was lots of things that were happening in the market, such as inflation, fears on interest rates, tapering, and many different things. There was also a China ban as well on crypto mining, which made the portfolio kind of go up and down depending on the month. I still had a fairly solid second half of 2021, but there wasn't anywhere as near growth as the first half of 2021. So I do understand that some of you may be looking at that number and say, well, my portfolio didn't grow 117%. And that could be because you invested later on in the year, and so you experienced less growth, or it could be because you averaged up on our portfolio copy and you added funds at periods where it was particularly high and you were buying into higher prices. So this can kind of fluctuate, and in the short term, timing can make a difference. I do admit that. But in the long term, it doesn't make a huge amount of difference if you're talking a long-term horizon of many years. So if your portfolio is not yet in profit, or you have a much smaller profit than me in 2021, then please be patient and know that usually the longer people copy me for, the higher the returns will be. So if we compare my 2021 results to a lot of different benchmarks, so because my portfolio has a lot of different assets classes in it, and it has a lot of different stocks from all over the world, I don't specifically identify with any specific benchmarks. But so for the purpose of this presentation, I think I am just going to give you lots of different benchmarks, and we can see really that I have outperformed them all. So the Nasdaq Composite was up about 21% last year. The S&P 500 was higher at 26.89%. The FTSE 100, which I have some shares in there in my portfolio, was up about 14.3%. And just notice there's a mistake in this presentation, but the Heng Seng index, which was Hong Kong, was actually down 14% last year. And we had, I do have Chinese stocks within our portfolio, and we had some weakness in our Chinese stocks in our portfolio, which did reduce some of our asset gains. And there's many people who say to me, well, you have quite a significant amount of crypto in your portfolio, so maybe you should look at those crypto assets more as a benchmark. I don't particularly agree with this, because I actually only have about 28% at the moment in crypto. And if we look at all of them as a whole, I mean, Bitcoin was up 61.58 for 2021, and my portfolio was up over 117%. So just a overview of the different asset classes in our portfolio, and I took this from eToro. So we have over 50-something% in stocks at the moment, mixture of stocks, in which I'll talk about a little bit later. Crypto, we have about 28%, as I mentioned. We have about 15.94 in ETFs. But I just want to explain that, because it looks like a high number, but actually I have a lot of ETFs, which may be commodities, for example. So I have the GDX gold miners ETF, and I also have an ETF about nuclear energy as well. So you could really class some of those under commodities as well as some key areas of growth, such as developing countries as well. I also have an ETF in Vietnam as well. Indices are about 1.22. I use those indices usually because of the fees involved. I use those indices usually to short the market when it's required and have some hedging positions, but I usually keep those short term because of the fees. And commodities as well in our portfolio. Just to let you know, I also currently have about 8% in cash. I usually keep that number between, as I said, between 5% at the minimum to about 15%, probably maximum in cash. I like to be able to deploy capital if there are any weakness in the market, and I like to have cash in place for that. I have a little bit of a lower amount than usual in cash at the moment, and that is because I have put in some shorts, especially around Omicron, and some extra hedging positions in place. In time, I will close out those positions and I will convert some of that to cash, which I will probably put more into stocks. Although I have very high returns for 2020 and 2021, I haven't taken an absorbent amount of risk. As you can see from the eToro average risk score of the last year, my average risk score is about 4. But I think it's very important for you to know maximum risk score as well, because you can see at any given time in the year what was the highest risk score, and the answer was 6, and that was quite early in the year as well, when there was, I think it was when there was a lot of volatility around crypto at that time, but it was very fleeting. And when I see risk creeping up, then I start to trim assets as well and try to reduce the amount of risk and hold more cash within our portfolio. But as you can see, the beginning of the year kind of was more around 5 for the first half of the year. And then for the last 6 months of 2020, I've been sitting at a very comfortable 4 risk score. I wouldn't classify myself as having a low risk score. I'd kind of say my risk level was more around the kind of medium level. I think it's important to have a certain amount of risk in order to be able to make good returns in the market. So I'm very happy with my 4-risk score, and I will probably keep it around this level throughout 2022. So some of the major concerns which happened in 2021. So there was a lot of key themes in 2021, which really lasted throughout the whole year, but especially heated up in the second half of 2022. So one of the key themes around last year was inflation. As you all know, the Federal Reserve and the central banks have been printing an exorbitant amount of money in 2020 and 2021. They have been purchasing bonds in the market to try and provide more liquidity in the market. And they have been providing stimulus to people who lost their jobs in the early part of the pandemic. And last year, in 2021, they actually 40% of the US dollars ever printed has been in the last 12 months. So people say that, especially the Federal Reserve, they say that inflation was going to be transitory. Actually, first of all, they said they didn't expect much inflation, and then they said it would be transitory, and then they finally admitted that inflation was starting to get high and it had to be controlled. And we actually saw that inflation figure accelerate to about 6.8 in November 2021, which was the highest since June 1982. But it's very important to note that I actually think that inflation is a lot higher than 6.8, because I think it's about 6.8 if you don't need to use energy, which we all do on an everyday basis. And we all need to eat food. We all need to buy cars. So I think inflation is in reality a lot higher than that. And it's not a surprise that inflation has increased. And the reason why my portfolio did so well in 2021 is that I envisaged that inflation was going to happen in 2021. You can see, look back and look at a lot of my different videos. And I made sure that I set up my portfolio with that in mind. As I mentioned, the Fed and the central banks did a massive bond buying in 2020 and 2021 because of the pandemic, to try and stimulate the economy. And what they have planned to do, because inflation is running wild, is that they plan to do a tapering exercise. So what that essentially means is they are going to slow down the amount of bond buying that they do on the markets and eventually stop that bond buying. So the fear of that has caused some volatility in the markets in 2021. Again, related to that, I think tapering is one thing in the Federal Reserve's arsenal to try and combat inflation. The other thing is interest rates and increasing those interest rates. So we've been in an environment where we've had pretty much 0% interest rates for a long time. And people, simply put, didn't want to put money in savings accounts or buy bonds because the interest rates, you wouldn't really make any money. So as inflation has got out of hand, in order to try and curb that inflation, they have started to talk about increasing the interest rates slowly. But it's a very fine balance because they don't want to increase the interest rates too quickly, which could crash the markets, especially those growth stocks, which are very heavily in debt and generally perform better in environments with lower interest rates. So the Fed announced in December that they were going to do 3 interest rate hikes in 2022, in 2023, and also in 2024. But latest news is they could either speed this up even quicker because of inflation, or they could add in extra interest rate hikes earlier. Lastly, and actually probably the most difficult concern of 2021 was the ongoing COVID-19 crisis. And COVID-19 in 2021, we saw many different variants attack populations around the world. So earlier on in the year, we had the Delta variant, which spread around the world quite quickly. It was quite severe as well, and we saw an increase in hospitalizations and death rates around the world. This was followed up pretty quickly by a vaccination plan which was implemented around the world, but some countries, especially in the more mature markets, a lot quicker than some of the developing markets. So we have that uneven amount of vaccinations around the world, but those vaccinations have definitely helped to, you're still able to spread COVID-19. However, when you get COVID-19, it's generally a lot less severe if you have been immunized. And recently we had the Omicron variant, which actually spreads a lot quicker than the Delta variant, but it is generally less severe. However, we did have a lot of volatility at the end of 2021 about Omicron because it wasn't known if the vaccinations would hold up to the Omicron virus. And it also wasn't known how much it was going to affect people and how severe it was going to be and whether it was going to put a burden on hospitals throughout the world. But although case numbers are increasing very high, the hospitalization and also death rates are pretty stable. So those were some of the things that influenced the market last year. So some of the highlights in my portfolio in 2021 was oil stocks did very well in our portfolio last year. And that is because oil prices rose, and many different reasons why the oil prices rose. And that is because there was more demand for oil after the initial lockdowns mainly in 2020. And after those lockdowns were lifted in 2021, there was a lot more demand for oil. Also, inflation played a factor as well, because as we know, oil price is measured against US dollars. And then when the US dollar's weak, it can cause the oil price to increase because of inflation. And also the OPEC Council was very cautious. And the OPEC Council, just to give you a brief, is a group of major oil producing nations around the world that meet together very regularly, which discuss the outputs that each country are allowed to put into production. So they were very cautious about their rises, not to flood the market with oil like we saw in 2020. So we've had success in our portfolio with Chevron, Canadian Natural Resources, and earlier in the year with Calumet Specialty Products as well, which is now closed out. Crypto last year had a lot of success, especially in the early parts of 2021. I think one of my biggest gains in my portfolio was with Cardano. I was buying Cardano during the bear market in 2019, and I was very bullish overall on the project. I very much like the founder, Charles Hoskinson. He's a very intelligent person. And I like the overall milestones of the project. And after I did a lot of due diligence, it went into my portfolio and I made a lot of good gains last year. And there were some trades which I made over 3,000%. I also got a large profit from Ethereum, and definitely rode on the back of the success of the Ethereum network. There was lots of things that happened this year in terms of NFTs, which really blew up on the Ethereum chain. And it was a great year. And I really achieved really good profits for Ethereum. And I still hold a good amount of Ethereum in our portfolio. also from Binance Coin. And because Binance Coin, there is a lot of incentives for using the Binance Coin, I thought it was important to put it in our portfolio because people get cheaper fees when they're using the Binance token. There's also a lot of importance of the Binance token in terms of utility around the Binance Smart Chain protocol as well. So I made a large profit from Binance Coin last year. And again, Bitcoin is the largest holding in my portfolio. So I also made large gains from Bitcoin, well above what you see in my portfolio right now, because I rebalanced the portfolio kind of, I think it was in February or March 2021, and reopened those positions. And I did a lot of short-term crypto volatility trades, which, although seem quite small, 5%, 5%, 5%, over a year, I must have done hundreds of them, which really add up. I also had a fair amount of tech stocks the first half of the year. And I thought in the zero interest rate environment, it was going to be very good for tech stocks, especially as during the pandemic, a lot of people flocked towards these stocks that did well in the pandemic. Because people needed technology because they were not able to communicate with people face to face like they did before. And I had success with Netflix, Motorola, Oracle, eBay, and Micron as well. And round about kind of the mid-year point, I still hold some technology stocks in our portfolio. But around the mid-year point, I decided to reduce my exposure to tech stocks. And I think that was a very good move in hindsight, because as there was talk of increased interest rates, there was a lot of pressure on those tech stocks, and they were starting to get very overvalued, which I'll talk about a little bit later in the presentation. I also added some financial services and insurance companies, and that was kind of, I think that was kind of April and May time, as there started to be talk around interest rates. Financial service insurance companies do very well in times where interest rates rise. So I added Ali Financial, BlackRock is also in our portfolio, as well as Hartford Financial and Cigna. And some of the pandemic bounce back stocks I did well with earlier in the year. So I had success with Airbnb, Aéroports de Paris, which is an airport group in France, and also Cedar Point, which is a amusement park chain in the US and in Canada. Some of those bounce back stocks I have actually shut now, and I shut them as Omicron was coming to a head, but I still made very good profits on them. So I can play with our portfolio when it's required, when certain things are happening in the macroeconomic environment. Commodities as well. I've also done a lot of commodities, short-term trades, mainly wheat, cocoa, nickel, and oil. Again, I'm looking to do a lot of short-term trades, but at quite a low profit. But I'm looking for a very high success rate of about 95% profitability, and exactly the same for Forex as well. And I think my top trading pair for last year was the US dollar Turkish lira, which we all know was a very good trade, because the Turkey have had a really tough time in terms of their currency, and the president has put in some very bad monetary policy in place. And then I had some success with value stocks. As I said, after the interest rate, after there was fear of interest rate rises and inflation, I added some value stocks, Big, Vista, Aqua, which is a water company, Waste Management, which does what it says on the tin. They collect waste management. Mondelez, which is a food brand company, Hormel Food as well. So those are some of the companies, but there is a list of a lot more. So those are some of those highlights of 2021. Fortunately, there's a lot less lowlights of 2021, but of course, I'm not perfect, and there were some stocks in our portfolio that didn't do so well last year, and there were some sectors. So as I mentioned, the Heng Seng index was down 14% for the last year. That means that I had quite a few stocks in our portfolio that suffered last year because they are based in China and they are on the Hong Kong Stock Exchange. So Alibaba was a stock that suffered for me last year. JD.com. There was a lot of regulations in China around those two stocks in particular, but around the technology sector as well, as China put in new regulations around technology and anti-monopolistic practices, which really hit Alibaba and JD.com hard. They were also issued with fines. The Fosun Group as well, which didn't perform particularly well last year. Fosun Group is quite similar to Berkshire Hathaway in a way. It's the Chinese version. It has lots of different companies, from pharmaceuticals to travel to sports clubs to restaurants. And a lot of their businesses were affected last year, and there was still the pandemic ongoing in China. And China, when a lot of countries opened up, China kept a very hesitant and a slow approach to opening up markets again, which had effect on a lot of the Fosun companies. 𝗕𝘂𝗴𝗴𝗲, which didn't go very well at all. Earlier on in the year, as things started to reopen again, I thought that the casinos would be a very good bounce back stock, but 𝗕𝘂𝗴𝗴𝗲 suffered a lot. And the reason why they suffered is that there was a lot of quarantine issues. The majority of their customers had come from mainland China and Hong Kong, and they had to quarantine for a large period of time, do COVID-19 tests, and there wasn't a lot of hunger for people to travel and to go to casinos. So that hasn't been very good. And 𝗕𝘂𝗴𝗲𝗲, which is a similar story, which is a restaurant chain, have also had similar issues where people aren't going out as much to restaurants. However, on the positive part of the Chinese stocks, I want to say that I've kept these stocks because I am quite bullish actually on the 2022 prospects for China. There are still a lot of fears in the market, but firstly, the stocks are very undervalued in China, especially if we compare those to their US counterparts. Secondly, China are easing when other countries around the world, such as the US and Europe, are tightening. And this could be very good for stocks in 2022. And thirdly, I think a lot of the regulations that they put in place in 2021 are now done. I think all the fines that they have given have been pretty much done. However, there may be some political risk on the horizon, and I cannot time when that exactly will be. And I will make sure that I keep my Chinese stocks at a certain level of my portfolio and don't make them much higher in order to give our portfolio more risk. There was also some declines in some of the darling stocks of 2020, which are some of those stocks which really benefited from COVID-19. And in 2020 and the beginning of 2021, those stocks really soared, led them to get quite overvalued. And I did make a couple of mistakes there. So 𝗕𝘂𝗃𝗃, which helps companies build websites. Obviously, a lot of people were looking at e-commerce in 2020 and 2021. However, that had a big drop in price. And then we had Activation Blizzard, which I won't go into a lot of detail, but they had quite a lot of scandal internally within their company and their management. Everbridge, which was doing very well up until about a month or two ago, but the CEO just resigned from his position. He was a very good CEO and he has driven the share price generally higher over the last couple of years. So there's a lot of fear there around Everbridge, but I'm still very bullish on it moving forward. And I think once these management issues are ironed out, I think they will do very well because there is no shortage of crisis in the world. And it's a company that I know pretty well. And Magnite, which is a company that I've actually owned in my own personal portfolio since 2016, hasn't performed very well. In 2020, it performed extremely well. Valuations got a bit high. They did a lot of acquisitions. There were lots of teething issues. There was a reduction in global advertising spend. However, I do expect that to pick up in 2022. And although that is quite a lot down in 2021, that is a stock that I have seen move up and down and is quite volatile. So we could see that turning around fairly quickly once their headwinds are in place. And then precious metals, I mean, gold, silver, and the gold miners, people were looking for them as a kind of store of value in portfolios. They haven't particularly acted like that for the time being. I think a lot of that narrative went over to crypto and to Bitcoin this year. And I think obviously these fears of interest rates caused those precious metals not to perform that well this year. However, I think it's important for me to still keep a solid amount of those assets in our portfolio. They're very defensive by nature. And I think that they could do very well in 2022 and start to catch up on the price, especially if inflation continues to increase and people want a flight to safety. Had a couple of bad pharma picks this year and a few blowouts, and that's with Blue Therapeutics and Corbus Pharmaceuticals. Pharmaceutical companies are very difficult to be able to, first of all, time, but also very difficult to get a lot of in-depth information. So they do a lot of clinical trials, stage 1, stage 2 trials, and you can never be completely sure with how they go. And if they're very positive, the share price can increase exponentially and, you know, be a 5 or 10 bagger. Or if they're not so successful and the pipeline doesn't get approvals, FDA approvals, then they can really suffer. And I had 2 notable bad picks in 2021, which didn't get approval for their drugs. However, they still do have some things in their pipeline. So there is a reason to be cautiously optimistic with some of those pharmaceutical stocks. So just want to do a major review of Bitcoin now and just talk about some of the key things that happened in Bitcoin throughout the year. So one of the big things that happened in Q1 of 2021 was Tesla bought $1.5 billion in Bitcoin, as well as MicroStrategy, who have kept buying Bitcoin since 2020 for the balance sheet and now own over 300,000 Bitcoin in the treasury. And Square also bought $220 million worth of Bitcoin as well, which they also put on the balance sheet. And there started to be a lot of optimism around large corporate companies on the balance sheet and putting Bitcoin on their balance sheet, which kind of fizzled out throughout the year. In the second quarter of 2021, Bitcoin hit its all-time high. I think it was in April of 64K. However, shortly after that, in May, there was a large ban from China on Bitcoin mining. And this caused the hash rate, so the hash rate for Bitcoin to reduce quite significantly and required that they have quite a large difficulty adjustment. And we saw those Bitcoin miners relocate to Kazakhstan, US, and other countries and restore some of that, or most of that hash rate. Then Tesla stopped accepting Bitcoin, and then we had a narrative around environmental concerns, which pushed the Bitcoin price, quite down, and it brought it all the way down to kind of about 38,000, I think, before moving up again and starting 2020. In the third quarter of 2021, we then started to see strong moves again in crypto. This was fueled around El Salvador making Bitcoin legal tender. There was also a little bit of clarity around Bitcoin regulation in the US. And in Q4, we saw some really good returns again. And we actually saw Bitcoin hit an all-time high again of 68,000 in November. And that was on the back of Bitcoin futures ETFs being approved. However, those spot ETFs, which have Bitcoin on their in their reserve, were not approved, and there is some hope for 2022 that those could be approved. And we saw the Taproot activation as well, which was a technical upgrade of the Bitcoin protocol, which is important, but I'm not going to go into the technical details of that. So it was overall a very good year. Bitcoin has come down again in price at the end of 2021 and now the beginning of 2022, but I am still very bullish on its future, and I do not think we have reached the all-time high yet of this cycle, and I still expect us to have a really good Q1, but we are currently in a consolidation pattern at the moment. So the future prospects of some of my largest crypto holdings. So I have a lot of crypto holdings in our portfolio, but I'm not going to go through each one because it'll be very laborious. But the main ones, the highest weighting ones, is Bitcoin. So will another nation state adopt Bitcoin in 2022? I think it's quite likely, to be honest. So there's two countries which are quite likely to adopt Bitcoin as legal tender in 2022. So one of those is Paraguay. South American countries, they've seen what El Salvador's done, making Bitcoin its legal tender. And they started to make strides and regulations and bills in place to prepare for Bitcoin as legal tender. The other country which is seriously looking into making Bitcoin legal tender is Tonga, which is a Pacific island country as well. So I think at least one, possibly both of those could make Bitcoin as legal tender in 2022, which would be a good benchmark. And will new public companies buy Bitcoin for their balance sheet? Yeah, I think it's quite likely. I think Michael Saylor has bought lots of Bitcoin for MicroStrategy, but I also think it's very important for other companies to take this on board in the future. There are a few issues around reporting Bitcoin on the balance sheet and what it does for companies' earnings. So I think there's got to be a bit more clarity about how Bitcoin on the balance sheet is reported. But I think it will come in time, and I think you'll see companies put a small amount of Bitcoin on their balance sheet to start with before expanding that out. Secondly, I expect another good year from Binance. As I said, using the BNB token, it allows traders to be able to get discounts on fees. And this is very important for the buying pressure of BNB, because these traders are buying BNB in order to save money on those trading fees, which can be quite significant if you're trading very regularly. Also, there is strong growth of the Binance Smart Chain ecosystem, which runs on the BNB token as the utility token as well. So, and they've been making a lot of investments in that as well. And hopefully there'll be some country regulation clarity for exchanges. In 2020, Binance had some issues with the UK and with some other countries about jurisdictions and licensing of crypto. They seem to be making a lot of strides as they mature as a company in getting some of those regulations, and recently have been regulated in Bahrain as well as some other countries as well. So hopefully they get regulatory clarity, which will be good for the BNB token. And Ethereum, expecting a big year from Ethereum, because everybody's been talking about for many years the anticipated release of Ethereum 2.0, but it's finally reality, where it's going to go when it's gone from proof of work to proof of stake. And I think this will be really important for the network. Obviously, there's a lot of worries about scalability and the speed and the fees of Ethereum. And I think that will be very much helped by Ethereum 2.0 when it's released in 2022, hopefully, sharding, another couple of areas of speeding up the blockchain. Also, there's been an explosion on our NFTs. I expect this to continue for a period of time, and also crypto gaming as well. Crypto ecosystem tends to go through these fads or areas of hot interest, and it's very high interest at the time, and I expect it to do quite well at the beginning of 2022, and then some of that NFT mania could start to reduce over time. And again, just like Bitcoin, will a Bitcoin spot ETF be approved? And that means, again, having Bitcoin on the balance sheet. Will an Ethereum ETF be approved? It's probably more likely that an Ethereum futures ETF will be approved, but there is many of those under application at the moment with the SEC. So, landing the plane, how I'm going to land the plane. So what does that mean? And how will I help you achieve that? Well, crypto is a very difficult area to get experience with. So I've been in crypto since about 2016, but I've been watching it and researching it even longer than that. And it takes somebody that has a very strong experience in the crypto sector, overall kind of lives and breathes this every day, to be able to not only manage the volatility, manage the timing of when you buy assets, manage the selling of assets. And crypto can be a cyclical market, and Bitcoin can go to all-time highs, it can reduce again. There are periods where we have bull markets and periods where we have bear markets. So I actually made my strategy this year because I consider that there is less risk the earlier you are in the crypto cycle than towards the end of the crypto cycle. So I had a higher exposure to crypto at the earlier stages of the cycle. And what I've been doing is I have been selling into strength. So when we've hit all-time highs in particular cryptocurrencies or got close to those, I've been reducing the exposure to those assets, locking in profits, and then investing in other areas such as stocks or other asset classes. So that is what I've been doing. And through that, I want to make sure that I continue to reduce that crypto exposure, because what I really don't want to do is have a high amount of crypto exposure and we go into a bear market. I don't expect that to be close in the time being. Not only do I look at time frame of the 4-year Bitcoin cycle, but I also look at sentiment in the market. And usually the end of a Bitcoin cycle usually ends up with a lot of euphoria. So we have a lot of retail investors flooding in, the price doubles, triples in a short period of time. And then the whales start to dump. And then you have this period of reduction of prices in a bear market before you start to rise again. And we haven't seen that amount of euphoria in the markets yet. So I expect us to have a very good Q1 2022, in which I will look to reduce our crypto exposure. But I will probably keep some crypto exposure as well, because you never know. I mean, history doesn't repeat, but it often rhymes, but sometimes it doesn't, and it depends on the situation. So I'll probably keep some Bitcoin, especially in our portfolio, but we'll probably scale back on altcoins as they are more volatile. And I will continue to do these short-term trades. If we have a lot of volatility in the market, I will buy the dips when required and book in profits. And I do a lot of research into these crypto projects as well. And I've done hundreds and hundreds of hours of research into crypto, into Bitcoin. So important to have a captain to help you to land that crypto plane. But I have so much experience in different asset classes. A lot of people know me as a crypto investor. because I've made a lot of profit in crypto, but I have experience in all different asset classes. So you can be rest assured with me in your portfolio that hopefully we will achieve good results. Some of the growth drivers for 2020. So I expect energy stocks to continue to do well in 2022. There's been a big energy crunch. Natural gas prices have increased a lot. That moved a lot of people to oil. As economies continue to open up and expand, there's going to be a lot of requirements for oil as well. I think the OPEC councils, again, are going to keep a steady approach to oil production. They're not going to flood the markets. And I think the US dollar, there'll be a lot of inflation, so it will continue to weaken. Oil is a tough subject because a lot of people think, well, oil's the past. Look at Tesla and look at renewable energies. And I think renewable energy is a very important key part of our future, and that is the way it's going, and eventually oil is going to be phased out. But I think a lot of people can get ahead of themselves that this is happening right now and that everybody is going to stop using oil. No, there's a huge demand for oil. So definitely in the short to medium term, especially in 2022, I see there being a lot of demand for oil. But I'm also invested in renewable energies as well, because as I said, I see them as a future. So I have a solar energy ETF, TAN, which I'm invested in. I have a hydrogen stock from Norway as well. And also I'm invested in a nuclear energy ETF as well, because I expect these renewable resources to try to be developed and taken into account in 2022. So I'm very bullish of that. Crypto, I expect it to be a year of institutional adoption. I think a lot of hedge funds, big money managers, family offices, insurance companies, pension funds are going to get into Bitcoin this year. There's a lot of regulatory stuff that they have to go through, and they've been working through that in 2020, 2021, and I think that they're getting quite close. Lots of upgrades in terms of the networks and different protocols coming into place, lots of new cryptos coming online, a lot of innovation and a lot of talent coming into the industry. And hopefully this is the year of regulatory clarity in US and hopefully a Bitcoin spot ETF. Financial services, I expect them to do well, as I mentioned earlier, with rising interest rates. And I think this will be very good for financial services and insurance companies. However, it's important to note that there could be some traditional threats to your traditional banks or financial services or even insurance companies in terms of some of the technology companies, companies such as SoFi and other companies which are dabbling in the banking sector over the internet. I expect quite good from our consumer staples and discretionary spend sectors. I think these consumer staples are recession proof. They're very good. They're usually items that are required in all economic conditions for everyday use. There are also pandemic factors in play as well. When there's quite a high number of cases, a lot of people are, eating in. People are using more products that are around the household, doing DIY. I have a stock in Black & Decker, for example. And I think value stocks, which a lot of those consumer staples come under, are comparatively cheap compared with growth stocks. And you'll see a chart on that in a couple of slides' time. So a bit of an economic snapshot from what happened in 2021, which will give us a portal into what that may tell us about that in the future. So GDP growth has continued to grow within 2021. As you can see, there was a large drop-off in GDP growth at the very start of the pandemic in early 2020. That has risen up, but it's still slightly below the trend growth. So I expect, especially as economies are recovering and coming more into line, that GDP will continue to rise in the US. By the way, this is looking at the US markets, and this is some of the components of GDP to the right of that diagram of what it comprises. As you know, inflation is increasing. We all know it's not transitory. There was a huge amount of money printed in the economy in 2020 and 2021. This caused this huge spike in inflation, and we saw, you know, core inflation at about 5% in 2020. That's even higher now, round about 6 point something percent inflation. But if we look, and that's just the core inflation, but if we look at the things that actually matter, food inflation is a lot higher. Energy inflation is through the roof because there was a big shortage of energy in 2021. I expect this to be continued, but I think that it will ease. So I think some of the arsenal that they're putting in place, such as interest rates, bit around their tapering, some of those supply chain pressures, which hopefully should start to reduce, I think inflation will start to ease, but I do not think it will go to the Federal Reserve's target of 2% anytime in the near future. So I expect inflation to continue to be quite high. If we look at value versus growth stock and the relative valuations, as you can see, tech stocks, I mean, we've actually had quite a big sell-off in growth and tech stocks over the last few months. But however, those growth stocks are still very highly overvalued. And if we look at this kind of divide between this is when growth stocks are cheap and value expensive, and value stocks expensive, and they were kind of around that 2013 to 2015 mark. However, we started to see that growth stocks became more and more expensive over time, and now we see growth stocks being extremely expensive when we compare those to value stocks. And that is one of the reasons why I have been investing a higher proportion of my portfolio in value stocks leading into 2022, because I do still think that a lot of tech stocks are still overvalued, but they were overvalued, I think, mainly to do with the pandemic and the acceleration of the use of technology. If we look at the S&P 500 valuations, it's still, the S&P 500 valuation is very high. And this isn't something that I'm particularly worried about. I think that it's quite normal, actually, as a cycle progresses. I mean, we've had a bull market since 2009, 2010. So it's a long bull market with just some pullbacks along the way. So stocks tend to get more and more expensive as the cycle progresses. And but they have been progressing for good reason. I mean, companies are continuing increasing their earnings. However, it's important to keep an eye on that and make sure that they don't become too overvalued on key metrics such as PE ratio and many other factors. If we look at unemployment rates and the rises in wages, and is the employment market still healthy? Well, the answer is actually the employment market is extremely healthy. And in the US, the unemployment rate is at about 5.9%. And the 50-year average unemployment rate is about 6.3%. So we are well below the 50-year average. This spiked up all the way to 14.8% in April 2020. But that, again, was mainly because a lot of the service sector jobs came offline. I mean, restaurants weren't open, and many leisure activities weren't open. And a lot of people did lose jobs because sales started reducing companies, and it was required for companies to let people go. However, as the economies have reopened, a lot of companies have recovered a lot of that lost revenue and profitability. And that unemployment rate has gone down significantly and is actually sitting at very healthy levels. However, we are seeing an increase in wage growth, which is hurting a lot of companies' bottom line. However, as we know, inflation is much higher than the wage growth. So as wage growth continues to rise, it's not going to be anywhere near what it is in terms of the inflation number. So I think we could see wage growth continue to increase over time. I think it's at about 4.2% at the moment, or there and thereabouts, and the average wage growth over the last 50 years is 4%. I expect that number to increase in 2022 as there is a lack of staff to do jobs and inflation is rising. Interest rates. This is a historical look at federal funds rate expectations. Obviously, the interest rates dropped to zero in 2020, 2021, and now at the early start of 2022. However, there is plans from the Federal Reserve to start increasing interest rates, and 3 hikes in particular in 2022, but they are going to start off very gradually, just going to have 0.13% and then rising up to 0.90%, and just steadily growing in 2022, 2023, and 2024. My feeling is that they could be increased further, and it really depends how inflation continues to play out. If inflation gets well out of hand, they will increase those interest rates. That could have an effect overall on the stock market. However, it's important to know that the economy has done well in many different interest rate environments. And even when interest rates are rising, economies still produce good results. And I think in the year, I think on average, I think I read a statistic that on average, the year after interest rates begin to rise, the average rise of the S&P 500 is still about 8%, even after interest rate rises. So I'm still expecting an optimistic 2022. I do expect there will be a lot of hurdles along the way. It is a volatile market at the moment. There is a lot of things going on at the moment that could come out of nowhere. But we tend to recover quite quickly from those periods because earnings of companies are so good at the moment. So that was a bit of an update of what was happening in the market, a bit of my outlook for 2022. Just some important copier information that I wanted to talk to you about in terms of your copy. Will I be adding funds this year to my portfolio? The answer is no. Why? Because I want to be as copy friendly as I can. I want to make sure that our portfolios are as synchronized as possible. if I want to add money to my investments, I will do it in my private investments. I have a lot of skin in the game already on eToro, which you can be rest assured about, but I don't see the need to add more funds and cause problems and force my copiers to add funds in order to stay in sync. So unless eToro completely changed the game in terms of qualification requirements, for example, if I ever got promoted to Elite Pro, I already have the required amount of capital. But if they are to change it significantly, I think that's the only situation where I could see that I would need to add. So I don't plan to do that. Minimum copy size. My current minimum copy size is about $850 in order to be able to copy any positions. If you copy with less than that, that counts for not only new positions, new copy positions, but also when you're adding funds as well. I've had some feedback that this is quite high for some copiers around the world. So I am taking efforts to be able to reduce that copy amount. And I think by the end of January, I think that minimum copy amount to cover all open trades will be about 700. I'll make an announcement about that when it's done. I'm just closing out a couple of small positions at the moment. And then I plan to have that by 500 by mid 2022. And I don't think I will have it any lower than 500. I don't think I'll ever get to the minimum of 200 because I have quite a lot of assets in our portfolio, and it's the way that I set up my portfolio in terms of diversification. Some of my personal aspirations for eToro is I would like to become an elite pro popular investor. Honestly, mainly because I want to have more copiers in my bees community. I want to get to know you all much better. And I really want to continue and strive for better performance. And I'm always working hard. I'm always studying companies. I'm always providing posts about my investments. So you're very welcome to recommend me to any of your friends or your family or anybody that wants to get involved in investing. And it's not a prediction, but it's an aspiration that I want to get to in 2022. But that can only be done through good results and good investment behavior. I also want to pass the 𝗕𝘂𝗴𝗲 level 4 exam. I passed the level 3 exam this year, and I'm working currently towards the CSI level 4 exam. Hope to have that finished within 2022. Lastly, I want to get to know you all better, and I want to help you achieve your goals. Honestly, I get much more satisfaction from seeing my copiers achieve their goals than I do my own portfolio rising. And that is because I feel a great sense of pride. And I know that many of you work really hard. And I know that you have families, you have aspirations, you have dreams, you have goals. And if I can help you achieve that, that gives me a lot of gratification. And, I've made quite a lot of money from my investments in the past that I can really focus on helping people now and helping you achieve financial stability and financial freedom in the future, just like I've managed to achieve. And I expect again to do very well in 2022. It may not be a triple-digit gain, but I think we're going to have a really good year ahead. And I want you all as copiers to be optimistic, but I really want you to take a long-term approach. Think multi-year strategy. Don't look at results from day to day, month to month. And I understand that December was a difficult period for our portfolio. Some of your copies maybe not looking as bright as they were in November when I was at portfolio all-time highs. But the month to month doesn't matter too much in the long term. I'll just make sure I'm doing the right things. I'm keeping composed, keeping my head straight. I'm a very calm person, and I expect us to do great in 2022. Thanks very much, and let's have a great 2022 together.